Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Let's take a look at what's happened as far as the global markets are concerned. The US markets ended with a positive bias. There was more traction that was seen as far as the European indices was concerned. And the Asian markets as of now have managed to recover from the lows of the day. Shanghai is down only marginally, but the other Asian markets have managed to recover in trade. Now, as far as the SGX Nifty is concerned, that continues to up move much higher. We're coming in close to the 11,500 mark in trade. The Nifty futures, SGX Nifty is indicating a gap up of close to 40 points in trade after a big 100-point move that we saw in trade yesterday. So that's the Q as of now. Most of the ADRs ended with a positive bias, with the exception of Tata Motors and HDFC Bank, which were down in trade. There was more traction that was seen on the positive side. So that's the scene with the ADRs. How did the Nifty pan out in trade? The Nifty was up 116 points, in line with what we've seen as far as the broader market is concerned. The small cap was up 1.4% and the mid cap was up almost 1% in trade. Even there was traction that was seen on the banking side. The Nifty Bank was up 1.2% and the Nifty PSU Bank was up close to 2% in trade. The two sectors that did well in trade was the metal as well as media sectors, up almost 1.3% to 1.6% in trade. Now, how did the month pan out in trade currently? The Nifty Pharma is up almost 3.5%. PSU banks were up almost 1.6%, and the small cap was up almost 1.5% in trade for this month itself. What is seeing weakness is the banking stocks, real estate stocks, and the auto stock. But last week you could see severe amount of traction coming in certain indices. The pharma index was up 5%. The PSU banking index was up 4%. Auto was the only one that managed to end with a negative bias for the entire last week. Now, how did the stocks at 52-week high pan out in trade? So these are the stocks at 52-week high, most of them gaining post the numbers. So Dabur gained post the numbers, you had Glaxo which gained post the numbers, Torrent which gained post the numbers, Havells which is trading at a record high, VIP came out with very strong set of numbers. So stocks at 52-week high are doing well in trade. No stocks from the A group in the 52-week low pack. Now, how did the fund flow pan out in trade? FIs were sellers, DIs were net buyers in the market, but overall for the month itself, FIs, DIs, both of them have been net sellers in the market. Now, if you're looking at how the Nifty pan out in trade, 116-point uptick on the Nifty. The HDFC as a whole did well. It contributed 20 points, but private sector banks contributed. Axis Bank, ICICI Bank, and ITC managing to contribute. The big drop came in only from HDFC Bank in trade, but overall it was a strong day for the Nifty itself. How did the futures pan out in trade? Fresh buying was seen on the Nifty. Open interest build up of 3%. The Nifty Bank also saw fresh buying. Open interest build up of 15% in trade. Now, if you're looking at where positions are taken, you could see that from 11,400 to high levels, call writers are active, and put writers are active from levels of 11,300 to lower levels. So this 11,400 remains a critical point. If the SGX Nifty managing to stay, this red line will increase and there will be shedding of open interest on the green line, and that's what you saw that happened on Friday. If you see what happened in Friday, because the Nifty managed to move up, put writers became aggressive all the way up to 11,400, and call writers had to shed positions, and they're taking in positions at levels of 11,600 in trade. So the market currently remains in grip of the bulls currently, at least for the Nifty. Which are the stocks in the F&O band? Adani Power remains in the F&O band. What is joining it there is Jet Airways. Open interest, the counter was down 6% on Friday's trade. Now, in terms of the Nifty PCR, the Nifty PCR moved to 1.72. The Nifty Bank PCR moved above the 1 levels to 1.34 in trade. As far as stocks are concerned, Torrent Pharma at record highs, fresh buying was seen on the counter. The other counter which is trading again at fresh highs is NIT Tech. Fresh buying was seen on the counter, open interest build up of 24%. You could see counters like PVR which gained on high open interest build up of 20%, and Nestle is the final one which I want to talk about. Came out with numbers which didn't meet too much of street expectation. Open interest build up of 19%, and that was on the short side. So this is what's happened as far as our markets are concerned. Let's go across to David Inglis for all the top international headlines.
Saudi Arabia has frozen trade, investment, and also diplomatic ties with Canada in the latest escalation here of their dispute over the kingdom's arrest of a women's rights activist. Now, Riyadh recalled its ambassador to Canada and ordered the envoy to leave here within 24 hours. Now, last week, Canada criticized Saudi Arabia's arrest of its activists, including Canadian citizen Samar Badawi. Now, the number of people killed in a powerful earthquake on the Indonesian island of Lombok has risen to 82. The magnitude 7 tremor struck a week after a quake actually killed a dozen people on the island. Now, the latest quake triggered a brief tsunami warning and damaged buildings as far away as Bali, including a department store and part of the airport terminal. Both Bali and Lombok airports do remain open. Now, over in Europe, UK Trade Secretary Liam Fox says that Brexit negotiations are now more likely to end in failure than success. Speaking to the Sunday Times, he said there's now a 60% chance of a no-deal outcome. He blamed the European Commission for a lack of flexibility in 16 months of talks. Now, the Prime Minister's office issued a statement saying the government remains confident of securing a deal with the EU. Now, Bloomberg's been told that Alphabet is in talks with Tencent and other Chinese companies here about offering Google Cloud services on the Chinese mainland. Our sources say the talks began early this year, although rising trade tensions could become an obstacle. Meanwhile, U.S. lawmakers are now demanding answers from Google over reports that the company is developing a censored version of a search engine for the Chinese market. Global news 24 hours a day on air and on TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm David Ingles. This is Bloomberg.
Big week for China data, and as you say, President Trump coming out of the weekend at this rally in Ohio, but also in a series of tweets, really trying to underscore his view that tariffs and the actions that he's taken give the U.S. leverage, and saying that he thinks that it is going to win, certainly in the longer term, and is going to open up China's economy. And he pointed for the first time to the impact on China's markets as well, the weakness in the equities, saying that this gives the U.S. leverage as well. Take a listen to what some of President Trump's comments were at this Ohio rally over the weekend.
They've taken $500 billion a year for many years. $500 billion. We have really rebuilt China. And and it's time that we rebuild our own country now.
So yes, China very much back in focus for President Trump over the weekend. Of course, last week we had those reports out of Washington that they were indeed considering raising the level of tariffs on potentially the next round of $200 billion worth of Chinese goods that would be hit by tariffs from 10% to 25%. And of course, we also heard that potentially there were talks going on in the background, at least among lower level officials from the Treasury Secretary's team and Liu He, of course, the vice premier here in China. But for the moment, the rhetoric is remaining very strong on both sides, and of course, actions as well, with China unveiling this list late on Friday of an additional $60 billion worth of U.S. goods that could be hit by tariffs in a retaliatory fashion from Beijing.
Yeah, Tom, to that point, what do we know about Beijing's latest response?
So this adds on the $50 billion that they've already outlined. Of course, they have hit back with $34 billion in this initial round of US-China tariffs. We're expecting potentially that the US is going to go ahead with this further $16 billion, and China would then match it. Now, China has outlined this list for $60 billion worth of goods that would be hit if the US goes ahead with these $200 billion that they've outlined. We're looking at tariffs ranging from 5 to 25% on about 5,000 different US categories of products. So the higher end of the tariffs are going to target products like meat, like wheat, but also, crucially, LNG. It's the first time liquefied natural gas has been thrown into the equation. This additional list outlined by China doesn't really do much to add further pain to the US agricultural sector, according to the analysts. But in terms of LNG, there is an impact there, and we saw some of those players in the US markets falling on the back of this news. So that is one to watch. Again, China has said it will not be bullied, it will not be blackmailed, and as you've been discussing with Heidi, we've been waiting to hear some clarity from China as to how they plan to respond if these $200 billion worth of tariffs are put in place by the US. We got a few more details on Friday. Now, of course, we're looking to see what happens with this consultation period in Washington towards the end of August, and then, of course, end of August, early September is when you could get these additional $200 billion worth of US tariffs imposed, and then we're going to see this retaliatory measures and steps from Beijing.
Well, on to Indian equity markets. Stock of the day is Gujarat Alkalies and Chemicals on back of good set of numbers reported by the company. Let's look at the revenue growth first, which is a 39% growth there for June quarter at a number of 753 crore as compared to 544 crore that you've seen in the corresponding quarter. Well, the net profit of the company has more than doubled from 95 crore to 183 crore. That's on account of healthy operating performance that we have seen. EBITDA for this company has risen almost 87% year-on-year basis at a number of 287 crore as compared to nearly 154 crore that you've seen in the corresponding quarter, reflect to which margins have shot up from 28% to 38%. What goes behind the making of these numbers? Well, efficient cost optimization measures undertaken by the company along with higher revenue has led to good set of EBITDA performance for the company. Raw material cost as a percent to your net sales, that number has come down to 28% as compared to 30% that we saw in the corresponding quarter. So was the case with employee benefit expenses, which as a percent to net sales slid to 7% from 9% earlier. Power and fuel expenses to stop a substantial reduction to 15% as compared to 18%, and so was the case with other expenses, which as a percent to your net sales declined to almost 12%. This, along with the lower finance cost and higher EBIT performance, led to a good bottom line show for the company. Let's quickly talk about what the company has done so far. Well, the diversified market manufacturer has a market capitalization of around 4,000 crore. In terms of sales growth, for a span of over a compounded annual growth rate of sales for the last 5 years have been poor at 4%. Return on equity over the last 3 years, however, has been at 10%, reflect to which we're seeing the stock prices down and out on YTD basis, and on yearly basis we've seen the stock performance up as much as 40-odd%. However, do bear in mind the fact that the company is a debt-free one.
Let's now shift focus and look at the commodity space as well, starting off with oil prices. WTI currently is trading with a slight bit of positive bias, but still below the key 69 per barrel mark. Now, this is on the back of intensifying of the US-China trade war concerns that have now escalated. In fact, China has threatened to levy retaliatory tariffs on 60 billion of imports from the United States of America. Now, looking at the base metal space, the index itself closed higher on Friday. However, there was no respite on the weekly front. It declined about 1.5%. As far as individual base metals are concerned, copper climbed on the back of some weakness in the dollar index and the Chinese yuan move that we have seen. Zinc closed higher for the second straight day and was in fact the top gainer in trade, surged about 2.4%. Nickel snapped its two-day falling streak, and aluminium in fact declined for the fourth straight consecutive day. Now, if you look at the Shanghai Futures Exchange, most of these base metals have started trading on a positive note. Lastly, if you look at the precious metal space, the gold prices are in fact hovering near the 1200 mark, which also is very close to the 52-week low on the back of investors favoring the dollar index.
Saudi Arabian oil tankers near the Red Sea were recently attacked by Yemen's Houthi rebels, leading the kingdom to take the extraordinary measure of halting shipments there. Why does it matter? Oil's journey from the Middle East to your local gas station takes it through some of the world's busiest and narrowest shipping lanes. A major disruption could send gas prices soaring. Oil's two main choke points are the Bab al-Mandeb Strait and the Strait of Hormuz. The first runs along war-torn Yemen, where Saudi Arabia has been locked in a bitter 4-year war. Markets mostly shrugged off the disruption because oil can still transit the other route. But it also casts a spotlight on the critical Strait of Hormuz, which carries as much as 30% of the world's oil. As tensions between the US, its Middle Eastern allies and Iran escalate, the possibility of supply being interrupted is rising. Iran has repeatedly threatened to block the strait, warnings that were renewed after President Trump took an increasingly hard line against Iran. Any disruption there would cause an immediate spike in global oil prices.
Amongst the stocks that one should track and trade today is IDFC Limited, and this is on the back of an ET report which says that KKR Capital Base backed Avendus could actually buy IDFC's mutual fund and securities businesses, and that could be valued, the deal could be valued at anywhere between 5,000 to 6,000 crores, so watch out for that name. Wipro is another stock to watch out for. The company has said that they are going to settle the National Grid lawsuit for about $75 million, and that may impact or reflect in the financials in the quarter ending September 30th. That's another stock to track. Next on our list is ICRA, where the board may consider a share buyback on August 9, so watch out for that one. You also have the likes of Apex Frozen Food, Avanti Feeds and Waterbase, which will be in focus, and this is on the back of India's shrimp exports to US falling for the first time in at least 18 months in terms of the volumes. So volume registered about 2% drop in the month of June. And down 13.2% in terms of value. There's a correction here in terms of value and drop of 2% in terms of volume. So negative development slightly for these three companies. Watch out for that, these names. That apart, you also have a strong set of numbers that were reported by Entertainment Network India. A revenue growth of 16%, but the net profit more than doubled to 9.3 crores. And even if you look at the operational performance, margins inched up from 16% to as much as 23%. The next on the list is Sickle Logistics, a weak set of numbers coming in. Despite a strong revenue growth of 32%, the company's net profit fell by 64%, and that has been explained by the operational performance where EBITDA declined by 13%. That's on account of the big jump that we've seen in the cost service expenses, which rose by about 41% during the quarter, and that has led to the depressed EBITDA performance of the company. We're also watching out for PI Industries, weak set of numbers, as in it has missed estimates. So revenue dropped by about 10%, EBITDA has dropped by 10% in line, and if you look at the net profit number, that has dipped by about 18%. Finally, what we have next on the list is Suzlon Energy, where the company's revenues have fallen by as much as 50%. EBITDA is down by a much sharper 84%, and that has led to the company reporting a net loss of 572 crores during the quarter, as compared to a profit in the previous quarter of about 50 crores. But those are the stocks that you need to track in trade today.
HDFC AMC will be listing on the exchanges today. Now, the company had seen some strong subscription numbers, and on the back of this, the street is expecting a premium of close to 580 rupees per share. That is a listing gain of close to 53%. So let's see how the valuation would stack up on listing. Now, at the issue price of 1100 rupees, the market capitalization of the company was close to 23,300 crore rupees. FY18 price to earnings was 32 times. FY18 price to book was close to 10.8 times, and market cap as a percentage of FY18 asset under management was close to 7.8 times. Now, if it lists at a premium and the share prices are close to 1,500 rupees, then the market capitalization of the company would be close to 32,000 crore rupees. Price to earnings would be 44 times, price to book would be 14.7 times, and market cap as a percentage of AUM would be close to 10.7 times. Now, if the share prices are close to 1,600 rupees, then the market capitalization of the company would be close to 34,000 crore rupees. Price to earnings would be 47 times, price to book would be 15.7 times, and market cap as a percentage of AUM would cross 11 times for the FY18 AUM. Now, this is what the valuations would look like on listing, but would it be right for the investors to buy the share prices, to buy the stock if the share price is soared to such a high level? Let's see what experts have to say on this. Now, Deven Choksi is comfortable with the valuations of HDFC AMC if the share prices are close to 1540, that is a premium of 40% to the issue price. Vaibhav Chaudhary would advise investors to buy the stock if the share prices are not above 1,250, because if it goes above that, then the valuations would be too demanding according to him, while Siddharth Khemka of Motilal Oswal believes that he would invest in the share price in the stock if the share prices are close to 1450, and given the grey market premium, the prices are expected to be above these levels. Now, we all know what HDFC AMC does, but two charts that show why the company has gained so much traction. Now, the company has total 133 schemes, of which 27 are equity oriented, while 98 are debt. Now, this is the important part. 47% of its mutual fund AUM has been into equity funds, and this has been increasing for the company over the past years. Now, a rising contribution from equity funds means that the company's total expense ratio allowed is increased, and that works in favor of an asset management company. Now, second is the chart which shows the number of SIPs and the average size of SIPs. Now, the total number of SIPs for HDFC AMC has increased from 19.8 million in FY16 to close to 30 million as of FY18, and the average size has increased from 3,000 rupees to 3,000 3,900 rupees. This shows how HDFC AMC schemes are gaining traction among investors. Now, in financial comparison, we have compared it with Reliance Nippon, which is the only listed asset management company in India, and we have also compared it with the ICICI AMC, which is the largest asset management company in India. Now, HDFC AMC's revenue, net profit and asset under management over FY14 to FY18 have grown at a better rate when compared to Reliance Nippon, but have grown at a slower rate when compared to ICICI AMCs. Now, the company's revenue, net profit and AUM grew at a CAGR of around 20%, 19% and 27.5% over FY14 to FY18. Now, though these growth rates are lower when compared to ICICI AMCs, but it is still the most profitable asset management company in India. The company's net profit as a percentage of AUM is the highest in the industry because of its higher revenue and comparatively lower total expense. Now, for FY18, the company's revenue, net profit and total expense as a percentage of AUM stood at 0.59%, 0.24% and 0.27%. However, compared to FY14, all the three unit metrics for HDFC AMC have declined. Lastly, on the return ratio side, the company's return on equity and return on asset are better than Reliance AMC, but are comparatively lower at a lower side when you compare it with ICICI AMC. Also, compared to FY17, the company's return on equity has declined to 33.4%, while the return on asset has remained stable at close to 36.4%.
Well, we had the management speak in a conference call to the investors, and among the key takeaways through the conference call, we understood from the management of Titan that revenues, which grew around 6%, well, while they were ahead of street expectations, they are likely to see estimates of around 20 to 25% as we move into the balance of the 3 quarters in the financial year. And July did see as much as 70% growth on a year-on-year basis, and that perhaps could be a positive, considering we have seen subdued growth in the first quarter. Moreover, the management suggested that the company continues to gain market share at the expense of the unorganized sector, and revenues were aided further by a price hike of as much as 6%. Moving on to the washer segment, it's been a lot more robust and it has come ahead of, once again, expectations. We do see a 15% growth on low base, and volumes are up as much as 10%. And it's been a strong quarter on the back of new product activations. The management suggests and is confident of maintaining about double-digit growth in FY19. And finally, this eyewear segment, which is also seeing 25% growth, is likely to see and maintain that growth rate going forward. So on the whole, the management sounding positive, despite the fact that we've seen a subdued quarter. We're positive when it comes to the quarters looking ahead.
Let's also get your check on the top 3 stocks to watch based on the delivery, buying and selling as of Friday's close. The first stock on the list is Jet Airways. Now, that was down about 7% in trade, but saw delivery selling of just about 74 crores. The delivery volume, in fact, surged just about 112%, while the total volume surged about 152% as compared to its 5-day average. Second stock to watch out for, that is Jubilant FoodWorks. Now, that was up about 2.5% in trade and saw delivery buying of nearly 150 crores. The delivery volume surged more than the total volume as compared to its 5-day average. Last and final stock to watch out for, Torrent Pharma. Now, that was up about 6.5% in trade and saw delivery buying of 77 crores. The delivery volume surged about 83% as compared to its 5-day average, while the total volume surged about nearly 3 times as compared to its 5-day average.
Right, www.bloombergquint.com, that's the website that you have to look for if you haven't yet. There are several stories that you'll find, including the live markets over the course of today. Here are just a couple of the stories that you'll find if you log on right now. The US arm of Sun Pharma is recalling over 5,200 units of testosterone cypionate injections from the American market. These were manufactured at the company's Halol plant. And the government will soon invite fresh bids for 100% stake sale in Pawan Hans by issuing an addendum to the divestment document after ONGC indicated its preference to sell its entire stake in the company. That's all you need to know going into trade today. Do stay tuned for a lot more on the other side of this very short break. I'm sure there's a lot that's going to be spoken about. This is Bloomberg Quint.